What's going on, guys? Quick little video here before I take off to the next spot. Now, again, what we're looking at here is today's price action. We're going to start off with the 5-minute time frame. I want to show you guys something here with these drawings, right? So normally you guys are used to me having the big chart up. I've got all the moving averages, but I wanted to take everything off. Okay, just look at the chart from a fresh set of eyes without any type of bias. Okay, coming into today's session, one thing should have been established. One thing should have been realized. That was over a 250 point drop in the pre-market. Okay. So if I just look at today's price action and I notice this high, right? We're going to call this the most recent swing high. Okay. And if I just let my eyes kind of do the work, I'm going to say that this here is the most recent swing low. Okay. So if I kind of draw this line across the screen here, I'm going to see that we're well broken through the range. Okay. Now, if we kind of look at what we did here 30 minutes before New York opened, we had a very aggressive inverse hammer. Okay. Indecision, doji, whatever you want to call it. Very aggressive wick to the bottom side here. And what you're looking at is a low of day or a low of session, low of New York session, low of pre-market, whatever you want to call it. Okay. So what I'm going to do typically is I'm going to mark out that low, because if we do bounce and the market starts to chop around off the open and we lose this low of day, what do you think I'm going to do? 100%. I'm going to take a short scalp. Whether I take that on a mini contract and just look for a quick grab, or whether I take it on a handful of micros and try to squeeze a little bit out of that, is my prerogative, how I'm feeling, depending on how fast the price is moving, okay? But it would 100% be a short position. Now, the next setup that we need to look at here is this 20 SMA, okay? So this 20 SMA setup here, we get back over the 20 SMA, and that time, let me get this off the chart, that time was 5 minutes off the bell. So 9:35, we get a closure back over the 20 SMA. Now, here's why this potential trade is about a B plus setup, okay, with potential, because I can do one of two things. The range of this reason why candles is 51 points. I can tell myself I'll take one or two micros and use the entirety of this reason why. So if I'm playing one micro and I lose the entirety of the reason why and we close below it, I'm going to lose about $100. If I play two micros, I'm going to lose about $200. Okay. The second thing I can do is tell myself, well, if I look to the left of the screen, okay, how much room do I have before next major resistance? And you may be thinking to yourself, well, if you don't have the big chart up, how do you know where the next major resistance is? Because I'm letting my eyes gravitate towards the area where we had some trouble moving higher, okay, before finally putting in this downturn. So if I get into the trade here and I do take it on, let's say, mini contracts or one mini contract, I have to assume that we could potentially touch this range before pulling back. Now you're going to see here, once we confirm this 20 SMA, we shoot up to a price of 205.86 from an entry price of 205.60. This was over a 25 point move in 5 minutes. So if you're trading minis, you're looking for those 5 points. You're looking for those 8 points. You're looking for those 10 points. You're in and you're out. If you're trading micros, yeah, you got put in some nasty little drawdown here, but we never closed below the 20 SMA. We never closed below our reason why. We held support and we continued to the upside, and you would have taken 50 points. Now, the next setup that we would be looking at is what happens once we take out those overnight or pre-market highs. What happens when we take out that previous swing high? Well, you can see that price action is breached here. That's why I have the line at 206.23. We breach price. You can tell yourself one of two things. I can play micros on the breakout on this candle, and I can use the previous 5-minute candle low as a stop. Also notice that that matches up with a prior swing high here. Okay, does that make sense? So if this is our potential, we broke through that potential, we can use the previous 5-minute candle low as our stop loss, and it also matches up with the mini swing high. Makes sense? So if you're also looking to take those mini contracts, well, again, if you're looking for a price break and you're looking for that price break over 20,620, 20,623, we shoot up to a price of 206.38. Okay, so you get another additional 10 points. And if you're looking for 5 points, you're looking for 6 points, and you have that order sitting there, that stop order sitting there, you should be in the trade, you should be out of the trade before this pullback. The only reason why you're sitting in this pullback is if you're trading micros, you're giving this room to wiggle and dance, and you're looking for an extension up. And how many points we would be looking at, we could target two things. The ATR at this moment in time was sitting at, if I can get this moved off the chart, was sitting at around 35 points. We could target 30 points. We could target 35. We could target the previous 5-minute candles entirety, which was 38 points. And you can see that you would have sat in it. Yeah, and it was choppy, it was grindy, but you could have got at least 20 to 40 points off this move. Now, what are we not thinking to do? Well, we're not thinking to try to get in front of this freight train. Okay, we don't want to get in front of this freight train. We can see now that we had a clear sweep of liquidity in the morning. We have a clear V-shaped recovery. We've taken out the most recent swing highs from the pre-market session. We've actually tried to pull back once or twice and is holding the 20 SMA. I'm going to ignore any short setups off the 20 SMA. Although this one never confirms, I don't even want to be thinking about trying to short. Now, I personally took a little bit of a short here. And it was right in this time here before I went this morning for breakfast. But if you look here, we had some consolidation. I threw one micro contract on up in this range. And as long as we didn't break the high of day, I was going to play this back into the 20 SMA. When we broke the bottom of this range, I added one more and I sold very quickly at the 20 SMA. That's it. Going against the trend, very dangerous, not recommended. But again, at this point in time, I didn't know, and obviously we didn't know that the market was going to continue higher, if we were just going to pull back and bounce, or that was going to be the high road and I could actually have a very nice position at the top of the range where potentially we come back down. Now, again, trying to pick the top is very hard to do. It's not like I'm going to do it here. I'm not going to do it here. I'm not going to just do it randomly. I need to see something happen. And what happened here was two indecision wicks, and we created a 3-candle range with a very, very tight window where I can use a stop loss over the high of day. Makes sense? So I'm not risking that much. I think at one point in time, I was risking about 8 points on one micro for potentially 20, 30, 40 points to the downside. That's a great risk to reward ratio. That's a little trade that I do not mind putting on. And if it does get stopped out, I'm okay with, a $15, $20 loss for a potential 60, 70, 80, $100 winner playing that one or two if I, once I added micros. Now, since the trend is visibly up, what do we want to do? We want to stay with the trend. We got another 20 SMA here. You could have done two things, used the entirety of the reason why, which was 25 points as a stop. You could have used the ATR, 25 points as well, or you could have just looked for a quick scalp here of 5 points, and you're going to see that you would have got it on this nice push up. And again, yes, you would have, let's see what if you would have taken the full 25 on that. 687 all the way up into 706, about 20 points there, and then it pulls back. You do go into drawdown. However, you haven't lost the entirety of the reason why. You did not close below the 20 SMA. You hold this if you're playing micros, and then as soon as it starts to give you those 20, 25, 30 points, you sell out of it. So stay with the trend as much as you can. And again, make sure you're doing your homework from the pre-market. The charts here in the pre-market, even though off the open, we got extremely choppy for about 35 minutes. This is nothing. This is in the middle of the range. We got a 20 SMA setting up here. We didn't take out the lows. We're not trading below the 20. We shouldn't be looking to short off the open. If anything, we're targeting the prior swing high. And once we break that prior swing high in that pre-market level, overnight session highs, we are looking to continue to ride the move. Okay, so we're continuing to ride the move. There was about one setup here, two setups here going into previous day highs, 3 setups there. 30-minute opening range worked as well. And then, the little bit of a pullback, and then we had a 5th setup. There was a solid 3 to 5 setups that all should have come around or before or the middle of lunch, and we should have been able to walk away. Beautiful price action today. In my honest opinion, it was a little slow. It was a little choppy, but it was trending in one direction, making it very easy to kind of read the levels. Going back to the pre-market, I hope this video helps you guys, and I'll see you guys on the room.